Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about tomorrow's client appreciation event, the UBS rescue of Credit Suisse, and what the phrase mark to market means. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. You have a client appreciation event planned for tomorrow. What can you tell us about it?
Hey, good morning, everybody. Good morning, Allison. Hopefully you had a fantastic St. Patrick's Day last week for everybody on Friday. What a day to have it, right? And then we had March Madness Thursday through last night. Hopefully your teams are winning, doing pretty good on the Texas and Alabama front, I might add. But so far, not so much on the Iowa State. Yeah, I hear you. But yeah, hopefully you had a fantastic weekend. Now we're back at it. Stuff you'll see in, you've gotten a couple emails from me on this. If you're checking those, we are having a client appreciation event tomorrow night. I'm very excited about this. I've been meaning to try this axe throwing thing, which, it's kind of fun to get together when I would doubt that anybody's actually thrown out of this crowd. I'll be impressed if somebody has, look a little bit silly together as you learn to try and learn new things. Also, they have metal playing cards to throw, if an axe is too heavy, which I get. They also have little throwing stars. So anyhow, some different fun things they have with targets. It's plenty safe. There's cages and bounce back areas and stuff. So no concerns there. But we are going to have that tomorrow night, 7 to 9:30. Try to make it on time for the initial safety brief. Otherwise, when you get there, you'll just have to have a quick safety brief, one-on-one or one-on-two. When you get there. But super fun. We appreciate you. Thank you for business. It's a trying time for financial institutions, which we're going to talk about today. And you have your money with Schwab, and, we're managing it, but your money is actually with Schwab. I can assure you Schwab is plenty safe, and our investing philosophy here at Ankerstar Wealth is conservative. Even the most aggressive stuff is still pretty conservative. Names you've heard of, best of breed sort of thing. So we appreciate your business, and just want to pay it back a little bit. Also, tomorrow is the 20-year anniversary of Shock and Awe. I'll have some of my stuff there with me, and I'll throw up a little video that'll be playing in the background. I'll just sit and watch it. But it'll be there, and I'll have my stuff and answer questions for everybody. So there is an RSVP in your emails. So if you'd like to go, please make sure you RSVP. So we have a decent amount on numbers. We will have some food there. We'll have some barbecue. We'll have some drinks, both alcoholic and non-alcoholic. And we're going to be giving away some prizes at the end. So it'll be a fun time. Come on out and see us.
Next, UBS rescued Credit Suisse by buying it. What does that mean for banks in the market overall?
Well, like we talked about financial institutions, right? We had Silicon Valley Bank, we had Signature Bank, we had some other banks that were troubled last week. This weekend, we have Credit Suisse, and UBS swooped in yesterday and announced a buyout of the bank there. So all in all, things are going pretty well. There, you see how the market just opened there. We, in a green a little bit, and the NASDAQ in the red. Let's refresh this real quick. So yeah, right around even. But what are the big concerns about there? Is there going to be contagion? Is your first concern? And I would say, well, so far we've seen banks go in and rescue banks. That's a great sign. The government, the Treasury, and the Fed, here on the U.S. side, hopped in last Sunday night and made a joint effort, said they were going to expand the FDIC fund and come with a new fund that they'll charge banks. So it's not the taxpayers bailing out the banks. It's actually banks bailing out banks. So as long as that's contained, there's really no issues to you and I, right? Other than there's going to be some volatility because people are concerned about it. But all in all, for having issues, things are going fine. I wouldn't say well, but fine. How about that? What it's really going to lead into next week is the Fed going to raise rates or not? Again, that's this week now, not next week, but Wednesday. At 2:00 Eastern is when the announcement will be. Will the Fed raise or not? If the Fed does not raise, the market's going higher. That has traditionally been the case. If they only raise 25 basis points, I think the market goes higher. But we'll have to listen to what they say. If they do forecast that they are done raising rates, then life gets good really quick, right? Especially as for the market. But back to the specifics of the UBS deal. UBS is a Swiss company, hopped in, saved a Swiss bank. So kind of how it's supposed to be working. Do we have exposure to this? I will look today. I don't think so, but I will have to go line by line through our investments to see, I could have a bond, Credit Suisse bond out there somewhere. So, we'll take a look at not only do we have an exposure to this, but if so, then we'll look at, do we need to sell, or is it just fine now, or what's going on? So that's what's going on with the buyout. Again, if these weren't banks buying each other, these would be pretty minor headlines. Since it's banks, everybody gets a little nervous when the financial institutions are involved. That's why you see the extra volatility. But all in all, I think it's going to be a non-issue, and hopefully this is the last banking story we have for a while.
Last, what does the term mark to market mean, and why is it so important?
Well, mark to market is why these banks are in trouble, and you could argue whether it's a good or bad thing. So why is it good? Well, first of all, what is it, right? So mark to market, a method of measuring the fair value of accounts that can fluctuate over time, such as assets and liabilities. And you're like, duh, that happens every single day. I'm like, well, it does with stocks and bonds, right? You have a price every day. What doesn't mark to market generally? Your house, right? And the only times it's ever actually recorded as the actual price is when you sell it. And that's if you're in a state that becomes public record. If it's not public record, then nobody's going to know what you sold it for. And it's never really marked to the market, if you will. But in investing or, shares of a business, what are those really worth? Well, there's what you think they're worth. There's what the owner says they're worth. There's what the owner says they're going to be worth. But really, when you go to value them, how do you value them? And that's the hard part. So a specific example and what's getting in trouble, maybe you've seen this if you had some individual bonds. We're 3 years into the since COVID, but certainly during the COVID sell-off and in 2022 with interest rates going up, you saw the face value of your bonds decrease. Why is that? They're being marked to the market of what they're actually worth if you sold them today. Now, if you're not going to sell them, then you don't care. You do care because they put it right there on your screen. So then, it inspires you to call me and ask me what's going on. Well, I get it, and that's what I'm here for. But if you're holding something to maturity, you don't care what it's worth along the way, kind of like your house. If you're not selling, kind of doesn't matter if your house is like up big, down big. It just doesn't matter. You're not moving. Same thing with bonds and CDs. So what got these banks in trouble is the balance sheet. They were invested in bonds and CDs, and you're like the value of the investment is unchanged. However, when you get to the mark to market accounting, that can show that it's a lot less. Well, when you have to make payroll, then you have to sell things to make payroll. And if all you have in your portfolio are things that have been marked to market lower than what you would expect to get for them, then you are a forced seller. And that's what we do. We try to do in investing is to avoid any situation where you're forced to sell. You simply have to hold through the volatility, especially with these fixed income investments out there. So that's what's going on. They needed to make payroll. They had to sell this stuff at a loss and move on. They couldn't sell it for face value. So what they thought they had on their hands for what things were worth and what they're actually worth was different, and they got burned by it. So does that affect your portfolio? Well, it makes it a little bit ugly when your portfolio, your bonds and CDs show less than what you paid for them. You are going to hold it to maturity, and you're going to get the money back at the end. So you don't have to worry about it, but it does make you concerned along the way. And of course, if you would have to sell it, then you are selling it for less than par value. So this was born. See if I can find it here real quick. It was born, I think, out of the financial crisis, where it became mandatory for people to mark to market, where you actually had to go in and value things for their sale value today. Before that, a CD that you bought for $100 and say you have $50,000 sitting in a CD, it would simply show up as $50,000 the whole time you held it, because that's what you're going to get when it matures. However, you can get into margin accounts, margin calls, all those sorts of scary things when things are being marked to the actual market. So on a personal level, I don't see it being anything you really need to worry about. However, with big institutions, they have to worry about it very much, especially if they have these long-term investments. So if you have any questions on that, go to Investopedia, Mark to Market. There's a video there, helps kind of break it down for you, because it really is a pretty advanced, for something so simple, it's an advanced topic.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar. We'll see you back here tomorrow.